So let's dive into tactical versus strategic management. Yes, what they mean, because that's a lot of jargon, but also more importantly, what makes sense for people, especially when they get into retirement. So, starting with strategic management, what does that mean? It's really like a set it and forget it approach, which is I'm going to pick a mix of stocks and bonds. I'm going to potentially rebalance those over time, right? So, if I start with 60% stock, 40% bond, and I feel good about that mix, and stocks light the world on fire and maybe it's 70-30, I'm supposed to rebalance. But that's really the only activity that you're doing in a strategic portfolio. Other than that, there's really just designed to be able to ride out the market, kind of be on the wave, so to say. The best example is probably it's like driving down the highway and you're just going to set cruise control. Like you're going to get there when you're going to get there, you're going to stay in one lane. If there ends up being an accident or a roadblock, like, well, it is what it is. It's just going to take us a little bit longer to get there. So what are the pros to strategic is that it is consistent. It's generally lower fees because quite frankly, there's no activity you're just on cruise control. It's not trying to get you anywhere faster or more efficient or anything like that. It's gonna, potentially be suitable for people who want just kind of that set it and forget it approach and aren't really looking for more of an active style of management. On the flip side, then, are the cons to that, which is that it is going to be less responsive. You could be on cruise control on that vacation, on your road trip, and you show up to a construction that you weren't planning on, and it might take 2 more hours to get there. Your plan might go down farther than you anticipated, right, in regards for your investable assets. You could definitely miss out on like short-term opportunities, both positive and negative, to just get out of the way and also to be able to capture some upside. And you are forced to ride that ride, which at the end of the day, people are inherently emotional with their money, and very few people can do that, especially in the distribution phase.
So tactical management, it takes a different path really than strategic. It's definitely more active. They're able to get in and out of trades, and it's not just riding the market up and down. So they are able to really adjust the portfolio based on what they see coming across the horizon. So, to use your car example of, it's not just setting it on cruise control or self-driving car and falling asleep at the wheel. It's, hey, we've got an accident ahead, we're going to exit. So what does that mean in real tactical? It means we might move all the way to cash at certain times. Now, some of the cons of this, right? Because as I say that, it's like, that sounds great. We're going to, go 85 when there's no cops, and we're going to exit, when there's an accident. But, at the second glance of this, there's going to be dislocation, right? There's going to be times where a tactical manager gets out of the market and the market goes up. So there's going to be times where you look really smart. It just kind of depends with tactical management when you get in. But the thing is, you have to stick the course. So that's why we have put together managers that have a strict defined process that we know what we're going to get with them. They're not trying to squeeze the last drop of the sponge and say we're going to get all the return. The whole point of tactical management to us is to avoid catastrophic loss, not to say we're going to day trade and beat the S&P 500. Another potential con of tactical management is they tend to be a little bit more expensive, but when you're looking at it, if the net return is still higher, right, you get what you pay for, right? You don't necessarily say, I'm going to go to the cheapest lawyer or the cheapest doctor. A lot of times people run from those things. So you want to just make sure you know what you're getting and what the net outcome to you will be. So tactical managers, they can certainly add value, but it has to be done with expertise and discipline along with a clear process.
So a big question that we get is strategic or tactical, which one is better? And just quite frankly, both have strengths, but also both have risks. So starting with strategic, just to kind of do a wrap up, it's kind of that more, I don't want to say old school, but kind of disciplined approach. You pick a mix, you stick with it, you ride out the rides, and really as long as you're not taking income and you can withstand those ups and downs, it's a low cost, easy alternative for people to just kind of set and forget it. Tactical, though, is really designed for people who are more conscious of, like, I don't want to ride the ride anymore, or I'm in retirement, I'm taking an income, I want to have an approach that has the ability to not just be on cruise control and can take a detour if needed, or just get the heck out of the way. Really, that's what tactical is designed for. That trade-off is basically, do I want consistency or do I want responsiveness? So, a cautionary tale I can think of, like at times when things don't go well and maybe you're using strategic, is people go in with the best laid plans, right? They've got a target date fund, which is what most people have in their 401ks. They kind of just throw it all in that. They've got all big ball in there. And I remember a client coming in, and they came in and talked to us, and they were a little bit bashful, quite frankly. And they came in and she told us, this was, a few years ago at this point, but they said, Jeff, Elizabeth, like, here's my 401k statement. I'm going to tell you right now, it's sitting all in cash. And we were like, okay, that tells me one of two things, but it tells me you're either very conservative or you did something maybe that you feel uncomfortable about. So, like, let's talk about why is it all in cash? And they had told us that basically when 2008 happened, they just freaked out. Couldn't handle it. They kept looking at their account every single day, panicked, sold everything to cash. And they had been sitting in cash for years at this point because they didn't know when to get back in. So basically they took the brunt of the downside, locked it in, and now are waiting for, we said, well, what's the time to get back in? Well, I don't know, when things feel better. And the answer is, well, if you're going to wait for things to feel better, that generally means that you missed out then on all the upside, and now you're buying back in at a potential, peak or downside. And that to me is the real downside to strategic, is that on paper, yeah, it sounds very simple, it's easy to understand, it's what people are used to maybe during their accumulation years. But when it comes to distribution and where those people, that retirement red zone where you're getting close, it's a very hard plan to stick to.
Yeah, very emotional. Right?
Yep.
So I'll tell a positive story instead. Of someone that had tactical management. So this was in 2022, and I called her and she said, I want to open up my statements. And this is near the bottom of 2022. Everything's down 20-ish%.
Even bonds.
Yeah, even bonds.
Yeah.
And so I open up her returns, and at this point I'm looking like, well, you're down 4%. So I keep saying, well, what do you think you're down? And I remember she said, at least a third. And I almost spit out my water. And I said, do you think you're down almost 30% or 30% or more? And she said, well, yeah. And I said, you're down 4%. She said, oh, okay, I feel much better now. And like, that was the end of the conversation.
Right.
So, part of it is, not what's best, one size fits all, but also if you're a client of ours, just open your statements, pick up the phone.
Right.
If you have concerns, call us. That's why we're here.
Yeah, I think the bottom line is, can strategic management work? Absolutely. Can tactical management add value? Absolutely. There's no one size fits all for everyone. We obviously, our philosophy is tactical management makes your income distribution, retirement, generally a lot more palatable and easier to deal with. But that also doesn't mean that your accounts are never going to go down either, right? As you've mentioned, it's just about how do we avoid that catastrophic loss inside of the accounts. And I think, when it comes to most retirees, that's really what they're looking for. Right? How many times have we sat down with somebody where they're just like, yeah, I've worked with an advisor for 15 years and I don't know, every time I call them, when the market's down, they say, well, that's just what it does. Mm-hmm. Wait it out.
Hang in there.
Hang in there. Nobody wants that as an answer, right? You also don't want, though, an advisor who's day trading your account. So I think the beauty behind tactical management is it gives people what they think that they should be paying for anyways. Like our clients, when they come to us, they're not paying for us to just sit and buy and hold their money. They're paying us to be able to find managers that can make some of these tweaks, make some of these detours to hopefully give them a smoother ride and a better outcome.
So your checklist for choosing, how do you know which approach is right for you? Start by asking these questions.
Yeah, there's probably 5 main questions that you should ask yourself, which is number 1, what stage of retirement are you in, right? Are you still accumulating or are we getting closer to the distribution? Number 2, what is your true risk tolerance? Are you somebody that wants to ride the ride, or does that not sound very appealing to you anymore? Number 3, and probably the most important, is what is your time and expertise in the area, right? If you're going to be a strategic investor, especially in retirement, do you have the time, do you have the expertise to be making the decisions that you need to be making in regards to rebalancing, reallocating, when necessary? Number 4 are what are those income and liquidity needs that you have? And then finally, number 5, what matters most to you? Is it just making sure that you own the cheapest thing? Or is it making sure that we're maximizing the confidence that you have in your plan?
And if you don't know the answers to all these questions, which most people don't, that's why we're here. We're helping to guide you in the right direction.
At Nova Wealth, we believe in tailoring your investments to what your goals are, not just fitting you in a one-size-fits-all box. So whether that is strategic, tactical, or a blend of both, if you'd like to figure out where your allocation should be, comment checklist below. We'll send you a link to our strategic versus tactical checklist that you can use, and then also a link to our calendar to set an appointment one-on-one to talk about it more.